Today is the day when I get naked. But also, I'm gonna tell you why you don't use your savings account, how much money I got paid in dividends, where this money came from, and how my portfolio looks like. This is the part where I get naked. Hello everyone, Alex is here. Welcome to my channel. Thank you for joining me here. Like this video, subscribe, and let's jump to this and talk. And first thing first, why you don't want to have your money sitting on your savings account. This is actually a very important topic, and I'm not saying that you don't have to use a savings account. You have to use it for certain reasons, but don't use it for saving all of your money there. And I would say that savings accounts are good for two simple reasons. One is the emergency fund that you want to use for any emergencies, and the second thing is you're collecting money for your purchase that you want to make in the nearest future, say like in the next half a year or something like that. And that's basically it. Don't use your savings account for your multi-year investment, for your long-term investment, because the inflation is going to eat out everything that sits there. The average interest on savings account is 0.9%, and the average inflation per year is 1 to 1.5%. There you go. You're basically losing 0.5% every single year. But instead, what do you want to do? You want to put your money in your high dividend yield portfolio that's going to be generating 5 to 7% on the market appreciation and 5% on dividends alone every single year. And that includes inflation and all that. And if you're going to be using that on your tax-free savings account, where you're not going to pay taxes on all the income you generate from these investments, those investments are going to be tax-free, and you're not going to get any taxes paid on that. Moreover, if you're going to be still using your regular account for all this, you're only going to be paying taxes for your dividends that are higher than $50,000. That's for Ontario. It is a little different per province and state, but the worst case scenario is going to be that you're going to be paying capital gains, which is way less than your income taxes. So we figured this part out. So now let's take a look and see how much dividends I got paid this month, the month of December, and where these dividends came from. And I'm already breaking the records on how much dividends I'm getting paid month to month. This is incredible, and I'm so hyped and pumped about this. All right, and now we can take a look at where all those dividends came from. So the first one is Canadian Utilities, $39.19. Next one is Enbridge, I think is one of the best dividend paid stocks out there that you can invest to. Paid $44.55. That's incredible. Then the next one is RELVEAL Canada. It's actually the real estate stock that is not performing well since the March of this year. We know what happened there, but it's actually starting to recover, and I think it's going to recover and come back to the pre-market crash really soon. So there's still time to invest into this and get this cheap and discounted stocks before that. So paid me $22 there. Next one is high dividend yield ETF. They paid $10.94 there. There's a small dividend from another ETF, which is in the real estate business, paid me $4.55. There's a big one from ExxonMobil, $43.50. This stock is not performing well since the March of this year. But again, this is the time where you actually want to invest in companies like this if you think they're going to come back to the pre-pandemic level. And the benefit of this is that the share price dropped significantly right now, but they're still paying dividends, so you don't care if the share prices drop or not. As long as the company has all the resources to pay back the dividends, that's all you care about. And again, right now is one of the best times to invest in companies like this if you think they're gonna come back and not gonna cut the dividends in the nearest future. Next one is again another real estate, which is a very cheap stock to invest to, and they're paying dividends consistently. Next is Manulife Financial Corp, is the insurance company in Canada. They paid $23.80. So next one is the Gladstone Investment Corp. This company is investing into small and medium businesses, and they paid $13.58 in dividends. And last company that paid dividends in December was another ETF, high dividend ETF, SPHD, and they paid a whopping $43.45. December was a really good month for me. I made more than $200 in pure dividends, and that's not including dividends that paid quarterly. So I'm not getting all of my dividends paid on a monthly basis. Some of them paid quarterly. That's why they're not included in this statement, but still I got more than $200 in dividends. It sounds like not a lot, but it's actually a lot of money, and it's going to be even more and more year to year when those dividends are reinvested back to the stocks they came from. And about this for investments, I have a drip set up, the Dividend reinvestment plan, where all my dividends are automatically reinvested back to the stocks they come from. And I'm also saving on trades. And say that I don't have drip set up and I'm reinvesting all my dividends manually to the stocks they come from, I need to pay commissions on all the trades. And only on the commissions, I saved around $100 only this month. And what it means is that without the drip, my net dividend income would be $100 less. And it sounds like not a lot based on the $60,000 portfolio. Now you want to say that in order to get $3,000 in dividends, I need to have a portfolio of $60,000. Where am I gonna get this? I don't have $60,000. You're a rich kid. You get all your money from your parents. No, I did not. It took me actually 3 years to get here. 3 years of hard work and sweating. No, I didn't sweat. You don't have to sweat to get your dividends and to invest. Dividend investing is actually pretty easy and boring. You just basically watch how money is flowing into your pockets. You have dollar bills. And most importantly, the longer you invest, the more money you're getting paid in dividends. If you start today with the $2,000 investments every single month, in 3 years you're gonna have your $60,000 portfolio with $3,000 dividends per year. In 5 years, it's gonna be $6,500 per year in dividends. In 10 years, it's gonna be more than $10,000 in pure dividends per year. So that's magic. This is the way compounding works. It's just math and math. The numbers basically adds up every single year, and the more you contribute, of course, you're gonna get more paid back in dividends, and you're gonna reach your goal faster. This is basically a way to generate infinite money. It's like a cheat code that no one told you about, and now you have it, so why don't you just use it? This will settle you and your future generations forever. So finally, let's take a look where all my dividends came from, what are the companies I'm buying to get those dividends back, and let's get naked. I'm joking, this is a children-friendly environment. Right, so now we are taking a look at my portfolio, and that's where I'm exposing everything that I have and all my investments that I currently hold. So let's see what is happening here. And now we're going to be looking at my RSP account, which is the retirement tax-free account. Let's take a look. So the first one is Aurora Cannabis. So I tried this out, it didn't work well. The price actually dropped 31%. There is no dividends paid out from this company. So let's move on. Next one is the Vanguard Growth ETF. I don't hold a lot of this and it's still performing well. Can't talk much about it. It's just the ETF, so it holds a lot of companies underneath. Next one is the Plaza Retail. It's the real estate stock. So I have quite a bit of this one and still it's paying back what it's worth for. I'm getting back dividends every single month and I got some this month as well. I'm reinvesting back and buying actually 2 extra stocks with every single dividend. The next one is Airbnb. So we know this company went public just recently in the beginning of December, and I decided to invest a little bit into this as I think Airbnb is going to perform well on the long run. So I'm holding like 8 shares of Airbnb just to see what's going to happen in the nearest future. And the next one is Gladstone Investment Corporation. So we just saw this one in my dividends activity that we got paid dividends from it. I think this company is doing great. They're paying dividends regularly, so I'm super happy about it. The next one is ExxonMobil. So this company that actually dropped a lot of value since March, but they're starting to recover. As you can see, the original price I bought this stock was $34 and now it's worth $41. And they're still paying dividends, so this is incredible. I'm super happy about this investment. The next one is the Enbridge Inc., which is the utility company in Canada. Everyone needs utility, everyone needs power and electricity in their homes and water supply to their homes as well. Even though this company dropped a lot of value in March, it started to recover in the beginning of September. And again, we don't care about the value, we care about the dividends, and they're paying dividends regularly. So I'm super pumped about this investment, and I'm actually planning to buy more of this in my nearest future. So the next one is the Manulife, which is the insurance company. Again, we just saw this in my dividend activity that they paid dividend this month. Super happy about this investment as well. They're performing well, they're paying dividends. They're going to recover back to the pre-March share price, and I can't be more happy about it. And I purchased more of this stock this month, and I'm going to actually invest more into this in the nearest future. The next one is the CPX. It's a Capital Power Corporation. I'm a recent investor in this one. I just bought this stock this month. and already it's showing up its value. At first, the share price is growing. They're also paying dividends regularly, so I'm super happy about this as well. The next one is Canadian Utilities. So this one is interesting because the stock price dropped significantly in March, but it sort of started to recover, but then dropped even more later in the year. And it's actually, I think, is still a very good investment right now because the share price is on a very good discount, and this company is still paying dividends, and they actually have a very good record growing dividends year to year. So I'm planning to buy more of this or next month because the share price is in a very good spot right now. The next one is the Bank of Nova Scotia, called Scotiabank here in Canada. So this one is very nice investment that I put in place in October and then a little more in November. They pay dividends consistently and they grow in their dividends year to year, but also the stock price is growing back to the pre-March levels, which is very optimistic. I'm actually very pumped about the Bank of Nova Scotia. It got a lot of awards this year to be as one of the best banks in Canada. So very good investment, I think. And see, there's a little notification here that I'm going to be getting dividends today, actually. Very cool. Next one is the ETF. It's the high dividend index ETF. So I have a lot of these, and because this is the ETF, it holds a lot of companies underneath and they're paying dividends regularly, so I'm super happy about this one. And I'm actually going to be buying more of this sooner rather than later, just because the stock price is very nice right now. Next one, another bank, Toronto Dominion Bank, TD Bank. I'm super happy about this one as well. As first, they're paying dividends consistently, they're growing their dividends year to year, and also the stock price has started to recover recently, so can be more happy about this investment. And the last one is SPHD, is the high dividend ETF, and most of my portfolio sits in this ETF. I'm super happy about this one, and I got a lot of dividends back from it, and also the stock price is growing significantly and it's gonna grow even more, and I'm planning to invest even more into this one when I get a chance. And as you can see, the total value of this account is 51,000 Canadian dollars, and since the inception of this investment account, my account value grew at approximately $2,000 Canadian and $1,300 in USD, which is incredible, and I'm super happy about it. Now let's look at my TFSA account, tax-free savings account. So the total value of this account is $10,644 Canadian dollars. I don't hold US dollars here just because I don't want to get paid taxes on the dividends I'm getting. And if you hold any of the US stocks under your TFSA account, you're gonna be paying taxes on all the dividends you're getting from these US stocks. So let's see what the positions I'm holding. So as you can see, this account is way smaller than the other one, but it's also a very interesting one, and I'm getting paid dividends regularly on this one as well. And the first one is VRE, which is the Vanguard Cap Real Estate Index ETF. I'm super happy about it. I'm getting paid dividends every single month, and the share price keep growing since I got this somewhere in October, November. The next one is XIC.TO, which is the iShares ETF, which basically holds all the best Canadian companies underneath. It's mostly into financials, but also it's one of the best Canadian ETFs you can hold under your portfolio. The next one is the Horizons Active Canadian Dividend ETF. So this one is the dividend-oriented stock, and I'm super happy about it, getting dividends paid. The stock prices keep growing, all good there. The next one is VDY, which is the Vanguard High Dividend Yield Index ETF. They're holding companies with a good record of growing dividends and also with a high dividend yield, and it just speaks for itself. I think it's a very good investment. I think it's a very good ETF that's gonna give you back all dividends you need. And the last one is the Real Canada Real Estate, which is the single non-ETF holding under this account. And why I bought this? I think the price right now is very nice. It dropped more than 50% since March, and it started to recover somewhere in November, December. And I think it's gonna come back to its pre-March levels, which is around like $30 per share. And right now I think it's a very good price to buy it, to get this dividends paid every single month and be them reinvested into the stock every single month. So I think it's a very good investment as well. And this is basically what my portfolio looks like today, and what I have, what I invest to, and why I do this. I hope you can make decisions for your own and decide which companies you can add into your portfolio and whatnot. I'm going to be dropping a video where I'm going to be talking about about the best ETFs out there that you can purchase and hold forever. And some of those are under my portfolio as well. Some of those I'm also going to be getting into my portfolio really soon. And I think those are going to be the best investments for beginners and those who are just starting out with investing right now. Because I think ETFs are one of the best places to start with investing, because you are very well diversified. So you're very safe in investments, and you can learn over time if you want to be exposing yourself into different single individual stocks in the future. And this is how it works. There's no magic in this. It's all real. You can do it yourself. And that's why I'm doing all this. I just want to make sure that every single person knows how to do it and can make a decision if they want to do it or not. This is just pure dedication and will from your side to invest. And honestly, I think that every single person needs and have to be involved with investment, because this is the only way how you can make sure you can secure your future for you, for a generation ahead of you. You can easily start your journey like this on your own. There's a link on the Questrade, how to create an account in the description below. There's also a personal finance tracker link in the description below as well. You can use that to track your personal finances and understand how much money you can actually invest into your portfolio. My dividend tracker and my portfolio tracker spreadsheet, which I'm going to be sharing with you in future. So I'm going to be posting more updates on that. One of the things I wanted to show is my sector diversification for 2 of my accounts I just showed you. So you can understand what I'm exposed to, and also myself can learn from this and see if I need to do any changes to my portfolio. As you can see, most of my portfolio is in the ETFs, which is what I want, and this is the safest place for your investments. I'm also a lot into financials, because I think right now most of the financial stocks dropped significantly since March. So I think right now is a very good opportunity to invest into those, because they're going to recover back for sure once the crisis is behind us and we're back to normal business. Same goes for utility companies, which have a very consistent record of paying dividends and growing dividends, and the stock price right now is super low. So I think it's the best time to invest into those as well. The real estate is another story here, as the stock for real estate dropped crazy this year, and some of them cut their dividends, some of them are not. So you need to be very careful here. But what is good about it, the real estate stocks, is that they pay dividends every single month. So you can benefit from that as well. And as I said, I'm going to be exposing all of this to you guys. You can have access to all this and see for yourself whenever you want, and make some learnings for you, or comment for me that I'm doing something wrong, which is totally possible, and I would thank you very much. Like this video, subscribe to my channel. Thank you very much for joining me here. Bye. What is happening? Oops.